having certainly in a sentiment sense can raise expectations. I think that overall liquidity is a much bigger impact on Bitcoin price during bull markets than the halving itself, because
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. According to Lyn Alden, we have observed a significant improvement in liquidity, largely driven by fiscal factors. It appears that Lyn Alden believes that there has been resistance to acknowledging the fact that yields are higher. Typically, when yields, especially real yields, are this high, gold should be significantly lower than its current value. It appears that Lyn believes gold investors have noticed some of the fiscal issues she has been discussing. Furthermore, decisions made by central banks to diversify their reserve holdings and include more gold in their portfolios have also played a significant role, particularly from a foreign perspective. There has been a significant increase in demand, and as a result, Bitcoin has experienced similar changes. Its value is closely linked to liquidity, and it has also been influenced by factors such as the introduction of ETFs. It seems that the two reasons for their rise are not completely aligned according to her perspective. She holds the belief that they are closely monitoring liquidity, primarily driven by fiscal factors. And lots of things Lyn Alden discusses, so please watch the video to end and share this video, and subscribe our channel Everyday Finance. Thanks.
I generally think so. I think we've generally seen improving liquidity. A lot of it's fiscal driven, and so I do think that they've resisted the fact that yields are higher, right? So normally when you see yields, and especially real yields this high, you should see gold a lot lower than it is. And so I think that gold investors have been sniffing out some of those fiscal problems that I've been talking about. And in addition, because of decisions by central banks to diversify their reserve holdings and have more gold in their portfolios, that's been another huge factor as well. So especially from that foreign component, there's been a lot of demand. And so, Bitcoin's obviously had somewhat similar catalysts. It's heavily tied to liquidity. It's had catalysts from the ETFs and things like that as well. So the reasons that both of them are rising, I don't think are perfectly overlapping, but I do think that they are following liquidity, and which is largely a fiscal driven phenomenon. Yes, but that's generally what you see in emerging markets when they have fiscal problems or currency problems. It's just not to the same magnitude you see in those environments.
So it's a byproduct of fiscal problems. Not.
I think what we're seeing is the denominator is going down more so than some of those assets are going up outside of the big bubble ones. And I would be concerned about some of the major stock indices because of how concentrated they are into some of the most expensive growth names. And so I expect the fundamentals of a lot of those growth names to probably do pretty well. It's just the question of how much you pay for them and how much of U.S. household net worth is already stuffed into equities. So I do have concerns about them all continuing to rise together. But I think that overall, the reason that those assets continue to surprise to the upside is because of that fiscal backdrop. If you were trying to short assets in an emerging market in a local currency, you're going to continually get headwinds from the fact that that currency is so weak, right? It's just that currency is going up in supply so quickly that the assets that you're denominating them in might not be doing great in real terms, but they're certainly doing fine in that local currency terms. And, we're not anywhere near that level. But it's directionally a similar problem. When you have this kind of unrestrained fiscal spiral that's kind of just a slow motion background situation, that just changes how some of these assets are priced. And it doesn't mean you can buy things at any price, but it means that when in doubt, the answer is that scarce assets will go up in price relative to currency units.
The strong upward momentum that drove Bitcoin to reach a record high of $3,835 on March 14th seems to be fading. The price has dropped by 10% from its all-time high. On April 2nd, the decline in Bitcoin's price resulted in a 7% plunge to kick off the month of April. Some analysts speculate that Bitcoin is entering a phase that has historically followed a specific pattern reminiscent of previous housing trends. The price of BTC seems to be mirroring the 5 phases of the Bitcoin halving. It is worth noting that the drawdown typically occurs 18 days before the anticipated halving date, which in this case is April 20th. A recent post on a social network by a crypto trader and independent analyst, Rec Capital, suggests that the current price movement is part of a retracement phase, similar to the ones observed during the 2016 and 2020 halving cycles, where BTC experienced dips of 38% and 20% respectively. One can observe a significant shift in the Bitcoin futures market by examining liquidations. During a 24-hour period on April 2nd, over $115 million worth of long positions were liquidated. This happened at a time when there was heightened volatility in the market. Bitcoin long liquidations experienced a significant surge, reaching over $21 million in just 4 hours. Interestingly, this occurred on a day when BTC longs were being liquidated without any corresponding buying pressure from traders. The price of Bitcoin is experiencing a negative impact. The trading volumes of Bitcoin experienced a significant decline of over $30 billion since reaching its year-to-date peak of $45 billion on March 5th. The decrease in exchange trading volume coincides with ongoing pressure from spot selling. The price of Bitcoin, along with its trading volume, has experienced a significant decrease of over 50% from its year-to-date highs. Recent buyers of Bitcoin appear to be short-term holders, which could contribute to the ongoing decline in Bitcoin prices. These short-term holders currently hold the highest BTC supply since July 26, 2021. This suggests that they are taking on more risk and engaging in profit-taking compared to long-term holders. The price of Bitcoin remains closely tied to macroeconomic events, and there is a possibility of additional regulatory measures affecting it. In the long term, the price of BTC may be influenced by factors such as the BTC housing market and the Federal's monetary policy. Market participants anticipate a potential recovery in the Bitcoin price, particularly due to the increasing adoption of BTC by financial institutions. Let's back to the Lyn Alden interview.
I think those are both factors. I think the ETF unlocks, there's pools of capital that are very big that have not been able to access Bitcoin. And so those pools of capital can increasingly access Bitcoin. And so that's kind of pent up demand for exposure to the network that they now have exposure to, or at least, and they don't even all have it yet. Sometimes it takes months for those things to still get approval to start moving in and start to become normalized in those environments. So I think that is a contributor to price. The halving, certainly in a sentiment sense, can raise expectations. I think that overall liquidity is a much bigger impact on Bitcoin price during bull markets than the halving itself, because if you do the math for how much supply the halving takes off the market per day, it's relatively small compared to what you can get from ETF inflows, or relatively small compared to what you can get in one-way kind of net exchange volume in a given day. And so the overall changes in external demand for Bitcoin play a bigger role than just the halvings during bull markets. I think where the halvings really matter the most is during bear markets. They play a pivotal role in why each cycle gets higher highs and higher lows than the one before it. But in terms of the timing of bull markets specifically, I generally point more toward liquidity and less so toward the halving, even though the halving is a very relevant kind of longer term factor.
And so, putting everything together, do you anticipate Bitcoin to continue to outperform the other assets this year?
So for this year, I'm less certain. I prefer a 2-year view on Bitcoin. So I think that Bitcoin's likely going to do well over the next, call it 2 years. It can get through periods where it's overbought, right? Where you could have a pretty poor 3-month period with Bitcoin and it could underperform almost everything. And then it could have another 3 to 6 months of spectacular gains. And so my view is generally looking back from late 2025, I'd be surprised if Bitcoin was not higher than it is now, notably, and that probably outperformed other kind of large cap things you can own. But you have to account for the volatility.
An upcoming crisis is set to sweep the United States, causing concern among the world's popular investors, renowned for writing the highly popular personal finance book Rich Dad Poor. Dad Robert Kiyosaki has pointed out that a major crash is imminent, including the crash of Bitcoin. Kiyosaki also predicts that Bitcoin will plummet to $200 per coin. In response, the author of Rich Dad Poor Dad has pledged to buy as many coins as possible, referring to it as the people's money. Additionally, he agrees with Dent's opinion that the younger generation will suffer the most as their homes lose value. Furthermore, he believes that the S&P 500 will experience an 80% drop. In this situation, he plans to invest in more real estate, gold, and silver. Being well prepared can lead to significant wealth, potentially making individuals multimillionaires or even new billionaires. Holding assets such as gold, silver, and Bitcoin can also bring riches. Notably, respected experts in crypto trading are optimistic about the future, predicting Bitcoin prices to reach as high as $100,000 this year and an astonishing $1 million by 2025. It is crucial to conduct thorough research before making any investments. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.